Hi Iconoclast fam, thank you so much for all of the engagement around the research that we released around SAA. There's been so much discussion, so many questions, so we thought we'd run through the research in a more thorough way to give you a better sense of what we're saying, to clarify some questions and parts, and I think it's an important conversation for us to have as shareholders, as the citizens. We're going to be talking a lot about the folks that are working at Airways Park and are in planes at the moment. I expect they might be interested, but let's talk about them. Let's talk about whether or not having SAA for us the citizens, us as a country, if it's beneficial for us, if it makes us richer, if we're better off if we privatize it, or is there an alternative way that we can all arrive at the same things we're hoping for? Prosperous country with massive economic growth, with a burgeoning fiscus that allows people to pay less taxes and enjoy the fruits and cakes of our amazing land. So, I have a view on it. Let's look at the research and let's talk about why it is that I firmly believe we need to invest properly into SAA. So what I've done is I've just titled this What to Do with SAA, because we must strive to a point. I understand that there are a lot of difficulties in trying to understand that there's something else to be done with it, but in order to get the full story, let me tell you a few backstories that we need to be appraised of before we can have this conversation. The first is I want to do a quick rundown of GDP. We're going to be talking about South Africa as a whole, and this is the big equation that everyone focuses on that shows us whether or not we're doing things and going in the right direction. I'd like to draw your attention to just these four parts. This is the equation along the top, but FDI is the part that increases this part of the equation. Jobs increase the consumption part, higher taxes increase the spending by governments in the economy, and foreign earnings is something that is the difference between what we get in versus what we have to pay out. To the extent that there's a shortfall in those two things, we have a problem from a currency point of view, meaning that our purchases the following time are much more expensive for us. So these are the dimensions that we must look across in order to understand, is something strategic or is something a waste of time and money? I don't want to spend too much time on this graph, but I want to say this. There's a very good report from the London School of Economics. They are the Oxford School of Economics, highly regarded. They have an entire report on this if you're interested. There are two things to take out of this. The first thing is there is a very high correlation between high FDI stock and high connectivity. This is where South Africa is currently positioned. If we want to increase the part which is driven by FDI, connectivity is key to that. I don't want to digress too much into the economics that drive this, save for two things. In order to invest in another country, it's central to the movement of people. Executives from one country need to go and be able to interact easily and quickly and frequently with executives of another. But more than that, more tellingly than that, is that cargo, air cargo as a percentage of all goods traded is now up at 35%, which means all the movement of goods is happening, 35% of it by air. If you look at that from an airline perspective, there are two things that are noteworthy. One is that the revenue from first class only accounts for 9% of airline revenues, whereas cargo accounts for a much, much higher proportion. But if you want to move goods and you want to move services, what's incredibly important for you to do is to have airlift. I think the one other thing to say about FDI very quickly is that even just 3 or 4 FDI events can have a monumental impact on an economy. So one person spending R1 billion, one person spending 5 billion, 10 billion like we've seen, is not something that we should look down upon just because it's one event, when the impact of it can be incredible for the economy. Now, we've spoken a little bit about FDI, let's touch a little bit on jobs. Now, the first thing to note is that not all jobs are equal. This is an important thing because we're going to touch on jobs a few times in this presentation, but one of the things you've got to understand is that you can look at the value of a job by the gross value that it adds. Some jobs add a lot of value. We like those jobs. It allows people to pay more, spend more, earn more, and also there's a higher tax revenue that accrues to us as a country when jobs pay more. Jobs with a smaller gross value added are obviously not as beneficial as ones that have a larger gross value added. The aviation industry, so everyone, SAA and others, Comair, SAF Air, every other airline worker in South Africa, they have a very high gross value added per job. It's 4 times the average of the average job in South Africa. What this means for us is that it's important for us to not only keep these jobs, to prioritize them, and to stimulate them so that there's more of these types of jobs versus the types of jobs that add less value. We'll get into the reasons for that a little later. But believe you, in a quick run through, this is a very sound point that we need to make. We've seen in South Africa that not all activity that guides economic growth actually increases jobs. You'll have heard the phrase jobless growth. And there are some jobs, as you can see from here, which are good for growth and good for jobs. These are the jobs that we want. There are some jobs that are bad for both jobs and growth. There are some jobs that are good for jobs, but they're not great for growth. So you'll have heard a lot about people going, the public sector wage bill is too big. They're saying there are too many jobs in government. And those jobs are so many, they're not allowing us to grow. So keep that in mind. Not every job is good for growth. And then some things are good for growth, but they're not great for jobs. There's one executive that can, invest his money and get a stupendous amount back. Yes, that's growth in the economy, but a lot of people are left out. And there are a lot of people in our day and age that are reaping the benefits of a system like this, who are able to employ their capital and get a massive return back, but it leaves the majority of South Africans out. So to understand what this multiplier looks like, these jobs that I'm talking about, and the fact that they're so important, what I'd like to do is to show you a little bit of analysis here. These are the direct jobs. These 56,000 direct jobs, everyone, this is not SAA, it's SAA plus Comair plus Swissport plus Denata plus every other aviation company in the country, 56,000 jobs. If you're interested in the SAA jobs number, that's 10,706 as at 31 March 2016. Those provide a 20 billion direct injection. 56,000 people, 20 billion direct injection. Then what happens is that you get a number of indirect jobs. These indirect jobs are contributing another 21 billion. These people, the fact that they need to eat, they need to travel, they need to do all of these other things, there's an induced effect. In other words, because these people exist, other people need to exist economically. 54,000 of them, also contributing 10 billion into the equation. And then what you've got is the catalytic events. Because this entire chain exists, there are things that the economy can do that employ 116,000 people and contribute another 23 billion. So this is how this stacks up. These jobs here are vitally important, not only for their direct contribution, but for the things that they enable. They're an infrastructure, they're a foundation, they're an enabler. They are things that allow us to do these things. Point number 1 is that if we were to make SAA smaller, or any other aviation player that is meaningful in size, and we made that smaller, this number shrinks. These numbers are supposed to grow. We're driving the growth of these numbers. To make these smaller is the wrong thing to do for this economy and the people of this country. The mandate of every one of us is to make these bigger, not to make them smaller. Privatization is a request to make these smaller. Let's pause for a bit and let's look at a few more foundations. Before we carry on, before you think that I want the government to take over everything and do something, it's important for you to know that I believe that the government should do for the people what they cannot do for themselves and no more. So I don't believe that there should be unfettered interference in the economy by the state. The state should do for the state should do for citizens those things that they cannot do for themselves. And this is what I'm advocating that we do here today with South African Airways. So if you're wondering about whether or not I think every state-owned entity should be owned by South Africa, the answer to that is no. The list of which ones should not be owned, which ones should be privatized, is the subject of a different talk at a different time. That's a different research finding. Key to us understanding this is we've got to understand that when we operate as a private business, we have a different set of analytics than when we act as a public business. A private business means that the bottom line is the part that is beneficial to look at because it determines as a private investor whether I've made a profit and loss. I'm in private business. When we make losses, we need to fund them. When you're a public entity, in addition to the bottom line, you still have this net effect to the fiscus. The difference there is the fiscus gets from public companies what private companies don't get. Taxes to a private company are an expense that you don't see the benefit of in your commercial entity. There are social benefits, but what happens is when I'm a public company, if I'm able to induce higher tax revenue, that tax revenue comes back into the public purse. And for those reasons, those analysis points are different. Now, it's important for us to understand that, because if we don't understand that, we're going to feel about SAA the way that we would if it were a private company. I appreciate the point that many of you would like it to be a private company. And maybe you are jumping ahead to that future date in your minds and are assessing it as a private company. The reality is it's not, and assessing it like that is not a sane way of approaching this reality. So let's look at if at all South African Airways loses these billions that people talk about. I've taken one of the many calculations in the media. Depending on who you listen to, which publication it is, this number is going to grow and it's going to morph, and the time and date period is going to yield different results. Here's the essence of this equation. I've taken the nice infographic that says 23.8 billion is the amount over the last 9 years that has been thrown into the dustbin of SAA. One of the things that I want to draw your attention to is that on average, SAA deposits 9% of its turnover back into the fiscus in taxes. This is an important point because whatever is going out from the fiscus is being returned to the fiscus by SAA. In the last reporting period, that 9% was fully 2.875 billion rand. So if you look at this 9-year view of 23.8 billion that suddenly has been lost, and you look that last year it was 2.875, the year before it was 2.833, and so it goes backwards, there is almost the identical amount going back into the fiscus, which leads us to see that there are no lost billions. Whatever is coming out of the National Treasury bank account into the SAA bank account is being returned in equal measure. There are no billions lost at all. You can only come to that conclusion if you don't understand how to evaluate a private company versus a public company. If you don't understand that, you're going to get to a conclusion that is erroneous and false. The reality is, whatever comes out of National Treasury's account comes back in equal measure. Now that we understand that there are no lost billions, it still begs the question, if we're breaking even, why is it that we should do it anyway? We shouldn't do things for breaking even. We shouldn't be taking out 2 billion to get 2 billion back. Now, it obviously sounds bad because this happens in 3-year cycles and sometimes it's 8 billion, sometimes it's 5 billion or whatever it is. The point is, at no point is the South African taxpayer behind on money. No taxpayer in this country has ever given SAA more than SAA has returned in benefit. Never once. So, is there any value to having SAA? I mean, if we're breaking even and there are no lost billions, the question is, why should we have it? Why should we keep it? And to answer that question, this is what we need to do. If you look at a 5-year view of domestic profits, you'll see that SAA has been making a profit domestically for the last 5 years. In addition, they've been making profits regionally. So this is flight to the African continent for the last 5 years. Where SAA has been losing money is in the international routes. So you'll see that this is the international graph, and this is where money has been lost. So let's talk about this desire to privatize. The desire to privatize would mean that the same thing to do would be to keep the profit-generating one, the regional profit-generating routes, and cut the international routes. By doing that, we're doing the thing that I am most against, which is making South African Airways smaller, along with the South African aviation industry and tourism's contribution to GDP and FDI's contribution to GDP, and making us less rich. This is not what we need to do. But we need to then understand what is the benefit of keeping this. It's not just to maintain size, it's to give us the thing that we hope for: growth, economic return, and prosperity. Let's take a look to see how this comes about. Many people ask the question, why is it that SAA cannot make a profit? The biggest reason, no matter how you look at it, no matter how you slice it, no matter how you dice it, is the fluctuation in currency exchange. This should be a revealing graph to show you just how different, just how volatile, just how divergent the Rand-dollar exchange is in comparison to the Brent crude oil price. Second largest cost for this business is subject to this type of volatility. There is no future-paced pricing that you could do at this level of volatility to be able to predict it. I understand that people want SAA to be managed better. You will have seen that SAA is managed incredibly well in many respects. They make a profit domestically, they make a profit regionally, they have a similar occupancy than one of the most respected global airlines in the world in the form of Emirates. But it is beyond the capability or the reasonable expectation of any executive to think that Nenegate is going to happen and the effect it's going to have on the Rand, and without any control either on that event or on the price of Brent crude, it is difficult to price effectively for a future-paced event, which is a flight. Everyone buys that service before, sometimes many months before. This is the single biggest reason why the bottom line of SAA reflects losses. Let me just say this. I'm not here to say that SAA management is blameless, and we don't need research to tell us that if somebody puts their hand in the cookie jar, they should be disciplined and removed. If they don't tender properly, they should do so. This is not what I'm talking about. I'm talking about the overwhelming, significant reason why there is a deficiency in the bottom line is because of this particular economic event outside of the control of every airline executive in the world, every single person in South Africa, sometimes except the people who have power on our levers of the economy. So it's important to understand a few things, because we're going somewhere and tourism is going to be a big part of that destination. Tourism is one of the world's largest industries. It's important to understand that beyond what we think in our bubbles in South Africa, that it is a massive industry. What I'd like to show you is that in terms of GDP growth, it contributed 3.3% of global economic growth last year. It is 10.2% of global GDP. 10% of the world's economic output comes from tourism. In addition to that, it is a $7.6 trillion. I can't count on a good day, so I'm not going to try and convert this into rands because I don't know how many trillions of rands this is. But it is an enormous opportunity which nobody looking to make money can disregard or dismiss or turn their noses up at. It is incredibly vast. For a job-hungry economy like us, the fact that 1 in 10 jobs, fully 292 million jobs coming from this industry, is not something that we can ignore. In addition, it is an earner of foreign currency, giving us money from other people so that when we exchange our money, we have greater purchasing power. And what then happens is that, in turn, our currency is more stable, making the things we buy from our neighbors a lot more affordable. There are many things about the tourism industry, but one of the things that you've got to understand is that it's important for us to understand just what an amazing opportunity it is. When we look at how South Africa aims to grow, every time that we have done the analysis of where we're going to get this growth that we all seek and are so desperate for, what happens is that whether it's the new growth path, whether it's IPAP 2, whether it's a national development plan, which is our plan from now until 2030, tourism is one of our prioritized sectors. We've looked at our available options, and we've decided as a country, in our options, in the top 6, tourism must be one of them. If that is true, and I have every conviction that it is true, we've got to do what it takes to activate the economic potential we can get from the sector. Let's look at a few stats that show us where exactly we are at the moment. So if you look currently, just on the turn of the year, tourism's contribution to the South African GDP reached almost 10% at 400 billion rand. 400 billion rand. What that does is that you can see the various effects of it in billions when you see what's direct, what's indirect, and what's induced. So this is a projection. This here is 2016, this is 2017, and by 2027, the same growth is still projected. This projection is not projected by me. It's not even projected by us, not even by the South African government. This comes from the World Travel and Tourism Council, WATIC, www.wttc.org. Go and look at what they see is our economic potential from this sector. If you don't trust this government, that's okay, but see what other people outside of us are seeing. The second thing is, if you look at it as a percentage of the whole economy, this is the almost 10% that I was referencing, and projected to outpace other sectors of economic growth to get to around 12% in 2027, all things remaining equal. It is not only lucrative now, it is not only 10% now, it is scheduled to outperform other areas to get to 12% of a much larger GDP at that point. Let's take a look at employment, because we've seen that it's possible to grow GDP without including everybody. This is as inclusive as economic growth gets. If you look at the numbers, you'll see again that the potential for jobs, this being 2016, this being 2017, the potential for jobs in 2027 reaches almost 2.5 million. This is what we're asking for every day. Every day, every talk show, every parliamentary question asks, where are the jobs? Why aren't you creating them in enough numbers? These are the numbers that we should be chasing. We have everything we need right now to obtain them. And they will continue to grow if we do what is required to activate this potential. Let's recap. At the moment, on average, the contribution that tourism makes to GDP is 19.1% for a country. So if you look at a country with a high contribution, it's above 19.1%. Look at where South Africa is. We're at 8.7%. It's our contribution that tourism makes to our economy from GDP. Look at our sub-Saharan peers. Okay. What this tells us is that if we just become average, not outperform, not be excellent, not stellar, move from our position of underperformance now to average, you can appreciate the economic benefits and rewards that are standing there waiting for us to harvest them. And to do so in an inclusive way with good growth coupled with good jobs. Let's come back to these international routes, because this is really the question. And there are many questions around that, but we need to establish a few things. This is the South African Tourism Annual Report. If you go to their website, it's freely available for all. What you'll notice is that they look at total foreign direct spend in the country, and then what they do is they break it down into two categories. Those that come from land markets, so people around us that drive or take a train or whatever the land route is. And then they look at it from an air markets perspective, people who fly in. When they do that, they also look at the spend figures. How much do people who come by land contribute? And how much do people who come by air contribute? What is clear to see is that while there are many more people that come by land, and this report will tell you just how many, the people who are much fewer, who come by air, contribute not only more, but so much more per capita. You can see this when you look at the average spend of somebody who comes by land at 4,700, and the person who comes by air at 17,700. It is hugely profitable for every business in this economy to have people with 17,700 rand in their pockets to spend at restaurants, to spend on transportation, to spend on accommodation, to spend on clothes, to spend on curios, to be in our malls, to activate this economy that we need and give us the growth that we deserve, the growth that we all crave. These people are a priority because they activate this in a very real and dramatic way. Let's take a look. If it was not for SAA, what we are saying if we want to privatize is we're saying we want this ability to get international people to South Africa to be smaller. We want people to spend less. We're saying we want less of this. Without any contradiction, this is the wrong answer for this economy. More of this is what's required. Less of this is not. Question is, if SAA were not the only, people always ask, SAA is not the only international airline. I agree. Other international airlines are profitable. I also agree. Here is the thing. There is a direct correlation between a direct flight and tourism volume. Whatever the connection is between 2 points that are not directly connected, when you directly connect them via a flight, the volume of travel between those two increase. Now, I'll bring you a South African example, but I want to take this internationally first. So let us go to a very different place to show you that these fundamentals exist regardless of who you are. Whether you choose to believe them or not, whether you tweet about them or not, these things are happening for the people that would use them. Turkey is an interesting destination. It has two things. A destination like ours in many respects, in the fact that it's naturally endowed with attractive tourism assets. And it has an airline. An airline now that has grown to 338 different planes. To put that into perspective, SAA has got about 60. So it is an exceedingly large airline. They're also great because a lot of in their growth, a lot of the routes that they flew, no one else used to fly. So it's very easy then to use this combination of growing airline, growing destination, because you can look at a 3-year view before there was direct connectivity, and a 3-year view after there was connectivity with just one airline. And that airline, in all respects here, is Turkish Airlines. This is done, just so that you know, by one professor from the University of Istanbul and 2 professors from the University of Washington. This is as international and as sound as economic analysis gets. This is not something I dreamed up to share with you today. What you'll see, this is the growth of destinations, again, available online for your reading pleasure. Read it, look at the sources, interrogate the methodology. Don't have time for that today. What we find, though, is the following. That on average, there was an incredible growth in passengers' international arrivals, and specifically those that came by air, the more Turkish Airlines made direct routes between Turkey and other destinations. On average, this was fully 410,000 people. This is the increase. So there was some travel before. 410,000 increase per route when they took this. 3-year analysis before, 3-year analysis after. There is no question that when we connect Johannesburg and Beijing, that the volume will increase. When we connect Johannesburg and Mumbai via a direct flight, that volume will increase. We've already spoken why increasing volume is the thing that we all want and the thing that we should hope for. We've also established that it makes us fabulously rich. So, I've already told you about the finding, but this is something that you will find everywhere around the world. If we choose not to use it for our benefit, it's on us. It's definitely not something that is because we are precluded for it for some economic reason. Let's talk a little now about things closer to home. The reason why I don't want to use this one too much is because in the middle of what was an amazing case study, there was also an unfortunate visa episode where we decided to lock out Chinese and other tourists, padlock the country for reasons unknown to me, so that they would have difficulty coming through. There are a number of things that I want to point out on this, which that I'd like to draw your attention to. If you look at the losses of the Joburg-Beijing route, which are the biggest losses, in 1 year in 2013, we had fully 151,000 Chinese nationals arrive. In addition to which, they spent 3.1 billion rand in this economy. SAA did not give us a detailed P&L of which years they lost the billion rand on the route. So I'm going to use an average of 333 million rand for the time that the route was in service. The question before us is a simple one. Would you pay 333 million rand to get somebody into the country that collectively are going to spend 3.1 billion? If we don't want to spend 333 million rand to get 3.1 billion back, then we don't want growth, we don't want investment. We should all shut down, emigrate, because there is no hope for any investment in this economy. Then, a curious thing happened. We protested, we toy-toyed, we marched, we went to parliament, and we cut the routes. And with it, we cut our own economic benefit and prosperity from that market. Then, I have a question for all these people who see the thousands, the hundreds of airlines waiting in the wings who can do everything profitably. Where are they? From what I can tell, the only airline that arrived to do this route was Air China, replacing an 11 times daily service from South African Airways with a 3 times weekly. Our money from this market dropped by more than 2/3. Is it a coincidence? Where are the others? Besides Air China's dip in the ocean. They just put their toe in the route. When we were doing this thing daily, and we were hoping to get this thing double daily and add Shanghai as a destination, we've now cut it and our money along with it. Pray tell, where are the Indian airlines when Joburg, Mumbai got cut? Where are they? If everyone can fly these routes, where are they? Why are we still waiting? Why are we still waiting, growing poorer because of our actions? The answer is a simple one. The answer is those airlines are not going to fly our loss-making routes because they're busy flying their own loss-making routes. I'm not sure what the divine right is of South Africans to receive things because we're South African, but nobody is going to do the dirty work of investing when we're going to get the returns. If we want the return, we must make the investment. There is a fallacy, a falsehood, a lie, something that we need to comprehensively deal with once and for all. That SAA is the only airline that is in receipt of state support. If you study this thing, you will see just how extensive state support is in all of its fashions. Whether it's investments, what we like to call bailout, injections, all of these things, it is vitally important to get this right. Now, few things make Emirates, the airline, grumpier than saying that they're in receipt of state support. So what they've done is they've decided to appoint themselves the watchdog in the airline industry of everyone getting some kind of state support. On their website, don't come via me, go to their website. There is something that talks about subsidies and their position. It's under their business model. Go and see it. This is not something I dreamed up. This is their compilation of every single airline in the world that is in receipt of some kind of state support. They are extremely upset about it, and they list everybody in great detail. You will see in there some of the industrial nation's powerhouse airlines. This is not because there are some mismanaged things. Some of the most highly regarded airlines in the world are there. And these amounts are incredible. They're incredible for two reasons. One, they refuse to do what we do with SAA. Know that we need to give them a large amount of full capitalization. For reasons of illustration, I'll use 10 billion rand. And then we keep giving them 1 billion rand. Whether you underfund SAA or any other state-owned entity or your child's lunch money, you know what happens? If they need 20 rands for lunch at school and you only give them 5 rand, they'll be back. It doesn't matter whether they go, well, I wasn't expecting you back. How come you're always back? It doesn't matter. If you underfund it, it's coming back. So what do highly successful, economically successful industrial powerhouses do? They give their airlines the investment they need to be sustainable so they don't come back, which is why Air India is getting 11 billion US dollars. If we're not going to fund this thing, we're going to run out of money. Can we kill that once and for all? The question before us is, are we going to fund it? But doing it in sense is nonsensical. Can we stop the madness, please? We neither need to do this thing or stop talking about it. It is not productive any other way. 13 of the largest carriers in the Star Alliance have received 6.8 billion euros or fully 50 billion rand. We're not losing anything in South Africa. These people are putting 50 billion rand in. Why would somebody do that? Is it not clear by now that a 50 billion rand entry ticket into a $7.6 trillion economic opportunity is worth it? If you have trouble with that, there is no hope for any investment in this economy at all. This is what's at stake. So, what should we do? Knowing what we know, the dynamics being as it is, let me say this, it is not wrong for South Africans to expect that SAA can be well capitalized in such a way that it will not keep coming back. It's on us to fund it in such a way that it will not go back. The next thing is, we need to make sure that we can compensate in our strategy for the thing that drains the most money from the SAA bottom line. And that is compensating for the currency exchange losses. Let's put these into perspective. A lot of people are probably going to tell me all of the airlines that are profitable after this piece of research. I'm aware of very many airlines that are profitable. When that is the case, there is a very high correlation with the two factors that I'm going to talk about now. If you can earn in dollars and buy your planes in dollars, the price is something that is fixed and constant, and you will not be surprised halfway through the payment period, however long it may be, with unforeseen shocks. The ability to know for sure that this 1 billion I have will give me a plane without a currency fluctuation is a luxury that many airlines enjoy. Whether they earn in dollars or not, it's not the exchange rate, it is the stability of the payment from manufacturer to airline. So many airlines enjoy this. In addition, if you earn in dollars and you pay for your fuel in dollars, you get the same benefit. Airlines' biggest costs are their fleets. Second biggest costs are their fuel. Third biggest costs are its people. We have no control as a populace. And SAA executives, whoever they will be, at whatever point, both past, present, and future, no matter how competent, will never be able to predict the shocks to the currency that are coming. So we need to compensate for that in the knowledge that we need to compensate for our currency disadvantage. For those people, of course, who tell us that SAA is managerially deficient, I have this question. How come Emirates, so highly regarded, Emirates, them of the grumpiness when other people receive state support, achieve substantially the same load factor in 2016 as South African Airways? If SAA was incompetent, I'd expect this incompetence to come across all regional and all domestic. Clearly, they can make a profit. They can also produce a load factor mixed up with the best of them. There are airlines with higher load factors. I'm aware of this. Those dynamics we can talk about at length, different conversation. What I'm trying to say is that the level of incompetence of SAA management that is peddled out there does not bear out in the numbers. There's no numerically or statistically sound argument to suggest that SAA is deficient in competence by any measure at all. Are they perfect? Absolutely not. What are the imperfections? I'm sure you know them better than me. I'm sure you spend all your time talking about them. You'll need to educate me about them. This is not the point. Numerically, and in a point of significance, incompetence is something we can rule out categorically from what we're talking about today. So let's talk about operating a hub. And here I'm going to have to be quick. I apologize. There's nothing more that I can do with this. Time doesn't permit us to do this justice. But if you get somebody in point-to-point traffic, you only are able to price on a demand curve at a single point. What is a great demand curve is the ability to price along the entire curve. What does this mean in plain language? It says, when lots of people fly over my region, look here, this is Emirates in the 1980s, and look at the Middle East now in the 1980s. There's a lot of air traffic here that we can leverage. And there is not air traffic here, here, and here, and here in the 1980s, or it's difficult to find all of these people because there's just not that many people traveling for all of these options. So on the subject of why it is that a diverse passenger base is important for airlines, you must look at the diagram that I have here. There are many of these that you can find online, but basically what you do is you try and you find an economy class ticket, a premium economy ticket, business class ticket, and a first class ticket. You do it on a round trip basis, and this one was done on a British Airways 777. This is a flight between London Heathrow and Washington, DC. It's got 224 seats. These are two premium destinations that we have as an example. You'll see that the price for this economy class ticket is 876 Rand. These 122 seats, they produce $106,000 for the airline from this cabin. What you'll notice is that premium economy, just 40 seats at $2,633, that produces substantially the same amount of money, $105,000 versus $106,000, as the 122-seater economy cabin. The 48 seats in business class at $6,723 produce more than premium economy and economy class combined with some additional change. And the 14 seats that are first class at $8,715 are greater than the 40 premium economy seat or the economy class cabin at 122. What we're seeing here is that 45% of the passengers, these ones, are producing 84% of the revenue. If you do not have a diversity of passengers flying for different reasons and you only have point-to-point traffic for a single purpose, and that purpose is for economy class only, you can understand the economic challenge that an airline with an economy-only configuration or an economy only high occupancy will be faced with against one that is able to spread their passengers across the entire cabin. Many people traveling from many regions, from all of the regions coming over here, the more people we have, the better opportunity we have to fill the entire plane the way that we hope. This is too much, but it will show you this is another reason, and I know that the people are going to raise American Airlines with high passenger load factors, and I wanted to show them that over US airspace at any given point in time, there are more than 5,000 commercial flights at any given point in time, which is why the ability to load like this is absolutely possible. It's not who you are or where you are, it's the air traffic above you. It's not because South African, it's not because you're American, it's the fact that there are many planes in the air. Many planes in the air, fuller planes. Fewer planes, fewer traffic above you, lesser load factors. So, I raise all of this to say the following. One of the opportunities that are available to us is to operate a hub. Go to a place where there is good air traffic. Establish a base. Start earning foreign currency, that we can start using that foreign currency to pay without converting that into rands. This is the first thing. If our biggest divergence is currency translation, we can go, like many other airlines do, and establish a secondary hub where we can operate from. You pay rent at an airport, call it Qatar, you pay wherever it is, and you start operating from there. In time, you build up two things. There's foreign currency that comes in, that you can use to settle the foreign currency expenses that you have. And the other thing that takes place is that you are free from the volatility, which is what is the biggest strain on the South African Airways bottom line. That is expensive. Qatar is going to charge money for establishing that operation, staff, costs, exchange rates, whatever it is. That's what it means to invest. Because to the extent that we can get other people flying for other reasons, we can get our planes fuller with a better mix of clients in order to make us more profitable. Keep those profits in a currency that is not going to be robbed by the exchange of that currency into the rand and then into the rand back. And in so doing, the effect of our international routes, which we fly to make the nation rich in other ways, will continue to go less and less and less. And when it is most profitable, when all of those things are profitable, what we're going to do is that we'll find that SAA has no reason to come back to us. There are other things. If we wanted to change our strategy, because there are many strategic options, and we wanted to fly long and skinny routes instead of employing the hub and spoke model that I'm talking about, that still means we need to pay for aircraft. Paying for that aircraft happens in a foreign currency. So until we earn it and keep it and shield ourselves from that volatility, all roads lead to some kind of investment to make SAA sustainable. Let's review. It is incredibly important for all parts of South African GDP, economic growth and prosperity to have SAA operating. If SAA is smaller, we make less money. If we don't do it, no one else will. No one is going to invest for us. We have the economic potential from the sector to win. Not just from our assessments internally, NDP, IPAP2, New Growth Path, but from the World Travel and Tourism Council. It is patently and abundantly clear to all except us. Let us not dilly-dally around this thing. While we are looking at this market, other people are doing what is necessary to fund the infrastructure they need to benefit from one of the largest industries the world has to offer at the moment. We must not underestimate the urgency of now. We must change our conversation. Can we move it to investment rather than feigning surprise when we fail to act in the way that all economic data encourage us to act? So for our view, for my view, An investment in SAA is absolutely necessary and non-negotiable, which is to the benefit of every single South African. Rich and poor, employed or not, in business or not, everybody benefits from us getting this right.